Everyone is talking about retirees flooding into Florida, but the data tells a very different story. Thousands of seniors who already made the move are now packing up again and leaving. Not back to the Northeast, halfway back. To states like South Carolina, North Carolina, Georgia, and Tennessee. Real estate professionals have a name for this pattern now. They call these people halfbacks. They followed the classic playbook. Grow up in the Northeast, build your career somewhere expensive like New York, then retire to Florida for the sunshine, the beaches, and the lower cost of living. That playbook worked for decades. It is starting to break down. By the end of this video, you will know exactly which states are absorbing Florida's outgoing retirees, why insurance costs are the single biggest reason cited by brokers and economists, and what this migration shift could mean for home values in the cities you call home. My name is David Cole. I am the editor-in-chief of Housing Intel. If you are watching this and you have not joined the channel yet, I want to invite you to become a member. Membership is how this channel stays independent from the real estate industry. It funds the research, the data subscriptions, and the time it takes to verify every number before it goes on screen. If you find value in what we do here, consider joining as a member using the button below this video. It helps us keep doing data-driven analysis instead of selling you a listing. Now let us get into the numbers. The first data point comes directly from a 2026 retirement migration study conducted by Hire a Helper, a moving and relocation research firm that tracks where Americans actually move, not where they say they want to move. According to that study, over 2,100,000 people aged 65 and older relocated in 2025. Florida technically still won that competition. More than 40,000 retirees moved into the state, more than any other single state in the country. Here is the number that should concern every homeowner watching this. Nearly as many retirees left Florida during that same period. When you subtract the people leaving from the people arriving, Florida's net gain among retirees was just 815 people. 815. For a state that markets itself as the retirement capital of America, that number is almost a rounding error. A state that received over 40,000 incoming retirees should be posting a net gain in the tens of thousands, not under 1,000. The gap between gross arrivals and net gain tells you that an almost equal wave of retirees is heading for the exits. So where are they going? According to the same Hire a Helper data, South Carolina posted the largest net gain in retirees of any state in the country, not Florida, not Arizona. South Carolina, a state that has spent years marketing itself as a retirement destination without ever having the brand recognition of Florida. Texas came in second. North Carolina and Tennessee followed close behind. These four states now make up the core of what brokers are calling the halfback corridor. And when researchers traced where South Carolina's newest retiree residents were coming from, the pattern was unmistakable. North Carolina led the list, which makes sense given the proximity. But Florida came in right behind it, ahead of New York. Think about that for a moment. Florida, the state every Northeastern retiree dreamed of moving to for 40 years, is now sending more retirees to South Carolina than New York is. The dream destination has become a launching pad to somewhere else. Lauren Reinhardt, a residential broker at Howard Hanna Real Estate Services in Asheville, North Carolina, put a number on this trend that should get your attention. She says approximately 40% of the retirees she currently works with relocated from Florida. 4 out of every 10 clients walking into her office already tried Florida and decided to leave. In her words, Florida was not what these retirees were promised. The heat became unbearable. The larger cities felt overdeveloped, with infrastructure that has not kept pace with population growth. And the cost of living, particularly insurance and HOA fees, started eating into fixed retirement budgets. That last point is the one driving almost every conversation in this migration trend, and we are going to spend the next several minutes breaking down exactly why. Before we go further, I want to pause here for something important. If this kind of independent analysis is valuable to you, the best way to support it directly is through a super thanks. You will see the option right below this video. A super thanks goes straight toward keeping this channel ad-light and focused on data instead of sponsorships from real estate companies. Even a small contribution tells us this kind of reporting matters to you. Now, back to the data, because the next numbers explain exactly why so many retirees are heading for the exits. Let us talk about insurance, because this is the single most cited reason for the halfback migration. According to data compiled by the insurance research firm 1-800-INSURANCE, after years of double-digit percentage increases, Florida homeowners may now pay nearly 5 times the national average home insurance premium of $2,110 per year. 5 times the national average, not 50% more, not double, nearly 5 times. For a retiree living on a fixed income from Social Security and a pension, that is not a minor budget adjustment. That is a structural threat to their ability to stay in their home. The causes behind this spike are well documented at this point. A consistent pattern of major hurricanes hitting the state, a wave of insurance fraud and litigation that drove up claims costs across the industry, and a steady exodus of insurance carriers who decided Florida was no longer a market worth the risk. The state has attempted to address the crisis through legislative reform, but for many current homeowners, those changes have come too late to undo years of compounding premium increases. Julia Donovan, a broker with Coldwell Banker Commercial in Charleston, South Carolina, frames this in a way that captures exactly how retirees are thinking about it. She says when someone owns a home, the mortgage is only part of the ongoing cost. Property tax, insurance, and HOA fees are the other major factor, and those costs do not go away. The number changes every year, but the obligation to pay never does. And in Florida, that number has been moving in one direction for years. Donovan also points to a psychological pattern she sees repeatedly among her clients. A bad storm season triggers an insurance increase. Even after paying that increased premium, the homeowner is still living in the same hurricane path as before. Nothing about their risk exposure actually improved. It becomes what she describes as a vicious cycle, and for a lot of retirees who have lived through several of these cycles already, they have simply had enough. Here is a data point that adds weight to all of this anecdotal evidence. A recent survey conducted by the Florida Atlantic University Business and Economics Polling Initiative found that half of Florida respondents said they would consider leaving the state specifically because of the rising cost of living. Half. That is not a fringe sentiment from a small group of frustrated homeowners. That is half of the people surveyed in a state of over 22 million residents, openly telling researchers they are considering an exit. And keep in mind, high home prices and stubborn interest rates are affecting most of the country right now. Those national pressures are layered on top of Florida's specific cost increases, which makes the math even harder for fixed-income retirees trying to make their money last. Now let us look at why South Carolina specifically is winning so much of this migration. Joey Von Nessen, a research economist at the University of South Carolina's Darla Moore School of Business, has been tracking this shift closely. He confirms that the majority of South Carolina's new retirees are still arriving directly from the Northeast, the traditional source for this migration pattern. But he says researchers are now seeing a distinctly larger and more visible group arriving by way of Florida. As Von Nessen describes it, these halfback retirees are, in a sense, still originally from places like New England. They simply stopped in Florida first before continuing on to South Carolina. The state offers much of what originally attracted people to Florida: coastal access, a warm climate, and a relatively low cost of living. What it does not have, according to Von Nessen, is anywhere close to the same level of insurance crisis currently affecting Florida homeowners. Fewer extreme weather events translate directly into lower insurance costs and lower overall housing expenses. And for retirees on a fixed income, that difference changes the entire location decision. North Carolina is pulling in its own share of this migration for a different set of reasons. Reinhardt says the return of 4 distinct seasons is one of the factors she hears most often from her clients. People who gave up cooler falls and changing leaves when they originally moved south are actively seeking that experience again in retirement. There is also a practical financial angle specific to Western North Carolina. Reinhardt notes that many Florida sellers are able to take the proceeds from their Florida home sale and reinvest them into a custom-built home on land that would be either impossible to find or prohibitively expensive in most parts of Florida. Wooded privacy, mountain views, and larger lot sizes are simply more attainable for the same money once you move inland and north. What does this mean if you are watching this from Florida right now, or if you are considering a move to the state? The forces driving this halfback trend are not temporary. Demographic shifts, the rise of remote work flexibility, and the rising cost of coastal living have been building for years. And Von Nessen's research projects that the broader southeastern United States, not Florida specifically, will see more population growth over the next 2 to 3 decades than any other region in the country. South Carolina, in particular, has spent years building a retirement-focused economy and marketing strategy, and that investment appears to be paying off at Florida's expense. The open question now is whether South Carolina and its neighbors can keep building enough housing supply to absorb this demand without driving their own costs up to Florida levels. As Von Nessen puts it, affordability is always a relative term, and from a national perspective, South Carolina is still considered very affordable. That relative advantage is exactly what is pulling retirees north. So what is the verdict here? Florida has not collapsed as a retirement destination, and gross arrival numbers prove that demand has not disappeared. But the net numbers tell the real story. A net gain of 815 retirees is not the sign of a market firing on all cylinders. It is the sign of a market hemorrhaging nearly as many people as it attracts, and the primary driver behind that exodus is not weather fatigue or a desire for new scenery. It is the math. Insurance costs nearly 5 times the national average, rising HOA fees, and property tax exposure that does not disappear just because a homeowner is on a fixed income. If you currently own property in Florida, this migration data is a leading indicator worth watching closely, because sustained outmigration among retirees in specific markets tends to show up later in slower price appreciation and softer demand. If you are still considering a move to Florida, this data suggests doing the full cost of ownership math before you commit, not just the sticker price of the home itself. And if you are watching from South Carolina, North Carolina, Georgia, or Tennessee, you are watching the leading edge of a wave that economists expect to keep building for years. This is exactly why Housing Intel exists. The real estate industry has every financial incentive to tell retirees that Florida is still the easy automatic choice it was 20 years ago. The data says the calculus has changed, and we're going to keep tracking it city by city and state by state. If this video gave you a clearer picture of where the retirement market is actually headed, subscribe to Housing Intel so you do not miss the next report. We publish data-driven real estate analysis every Monday, Wednesday, and Friday. We will see you in the next one.